Yo, what's up, ladies and gentlemen? Welcome back to Vusi Supreme Traders. Right? So in today's video, I welcome you this morning. It's a Thursday. It's a beautiful Thursday morning, but it's kind of cold and whatever. But you know, the grind don't stop no matter what, right? So in today's video, I'm sure you already saw by the title of the video, like I had a Supreme subscriber ask me, like, yo, Vusi, why are you always like using the H4 time frame and the daily time frame? Like, is there like is there a certain reason, like, why is there something specific as to why you always use the H4 and the daily time frame and you never use the lower time frames or whatever when you're doing your analysis and stuff like that, right? So I think that's a good ass question. So my man, you deserve a shout out, right? So I decided then and right there that, you know what, I'm gonna make a video on that, right? So let's get into it. In this video, I don't plan on making this video too long or whatever. I'm just gonna talk about, you know, what I need to get across to you so you can understand this concept better, right? So if you're new to the channel, subscribe, and like the video and comment. But like it after watching it, and comment also after watching it or during watching it, whatever, you know, tit for tat, yeah, all that kind of stuff, right? So let's go. Why do I use the H4 in the daily time frame when I'm doing an analysis, right? So fam, I feel like, in my experience, right, because I remember when I learned how to trade, I think I used the 15 minutes. I didn't use any time frame higher than 30 minutes for like over a period of like 4 to 5 months, right? And that was because of like how I was taught. I was never taught to I didn't even think I needed to go to the higher time frames or whatever. And it was only until I was experimenting and then I realized, like, oh shit, like, how is it possible that like there's so many time frames and I was only stuck on like 15 minutes, 30 minutes and the 5-minute charts and whatever. And I happened to be using a platform which wasn't MetaTrader. Like, I was using those other trading apps, you know, those brokers which have like their own trading platform. I was that type of trader, right? So when I hopped on over to MetaTrader now, the capabilities of analyzing was like next level. You feel me? The capabilities was like next level. And because I kept on learning, I realized the whole purpose of analyzing a chart, right? You want to have a overall sentiment of that market. What do I mean? So talking about the overall sentiment, I'm talking about the uptrend or downtrend or sideways market. You want to know the overall direction of that market. How is this market moving? Is it moving upwards? Is it moving downwards? Is it moving sideways? But now the thing is, if you can establish that in a smaller time frame, say for example in a 30-minute time frame, in a 30-minute chart, you can establish that this chart is going to be an uptrend. My problem with that is, and the problem that I'm sure you are also gonna come across, is you'll find that sharp, it's an uptrend, but that uptrend won't last as long as you wanna make money, right? You might hop onto that trend and that trend might last less than a couple of hours to like say the most, right? And it becomes shorter the lower you go. So if you're in a 15-minute time frame and you see this nice uptrend, don't expect that uptrend to last a day or whatever. Expect it to last a couple of hours. And once you go to like 5-minute chart, going from 30 minutes and then going to 15 minutes and going to 5 minutes now, expect that trend to last for like an hour tops or something. So that's my thing. I don't want to analyze 15 times a day, right? I don't got time to analyze the market 15 times a day. I want to analyze. So I want to analyze, right, before because I'm having a chain of thoughts right now. I don't want to go to the next thought without finishing what I'm saying now. So I don't want to analyze a chart 15 times in a day. I want to analyze a chart for the whole week, like one time. I don't want to analyze today, analyze tomorrow, analyze the day after, and the day after that. I want to analyze today and then come tomorrow to trade and like to trade for the whole week, right? So how I do that now, because I said the lower you go in terms of time frame, the smaller those trends are gonna last. The higher you go, the longer those trends are gonna last, right? Say for example, now we see a trend in a uptrend or a downtrend. Say we see a downtrend in the H4 time frame, right? The H4 time frame is like a sweet spot right there, because one candlestick takes 4 hours, right? So even if a trend isn't gonna have like less than at least 20 candlesticks in a trend, like expect to see more than 20 candlesticks, like just hypothetically speaking, right? So in 4 hours time frame, you know that those 20 candlesticks accumulate to like over a week tops. You understand? So that's still valid for me, because I can still analyze in H4 time frame and still have that like set up for the whole week or something. But when I'm analyzing with the lower time frames now, it's harder to it's harder to like keep up with everything that's going on, because with the trends that are like, you're gonna get like, it's gonna keep transitioning to a different kind of trend, to a different kind of market. So even if it's an uptrend, it might transition into a downtrend, it might transition into, and you might think that downtrend is gonna last or whatever, only to find that there was a pullback, So I prefer to go to the H4, and then with the H4 now, I can clearly see the highs and the lows, and the setups are just a bit more clearer and they last longer. So that's my take. I don't want to analyze the market over and over and over again, right? So now when we go to the daily time frame, like, you need to know one thing about the daily time frame. When it comes to the daily time frame, it's good for doing your analysis and looking at the setups. It's not good for opening trades, right? So in the daily time frame, because of the daily highs and the daily lows, right? You might find that if you're trading with the daily time frame, you're gonna enter a market. Say you want to sell, you're gonna sell a market when it's at the daily low or something, and failing to like realize that the market still has to make a daily high. So that means your position is gonna go into losses when that market makes a daily high, because when you didn't enter the market when it was at a daily high, you just entered the market just because like your daily candlestick close like outside of a trend line or whatever, which was a signal by itself. Yes, I agree, is a signal. But where you enter now, the way you enter it now, you need to go into the slower time frame. So if you're analyzing the daily time frame and you want to open a position, go into the H4 or H1 and look for those, like, look for a precise location as to where you can open that trade, as to like, because a daily time frame is like blunt. It's not, I don't want to say blunt, it's like you don't know exactly where in the market you're entering in terms of like the structure and everything. So once you zoom in with the H4 or the H1, now you can see the whole structure of the highs and the lows, the peaks, the bottoms, and all that kind of stuff, and you can enter and put your SL in a position where it makes more sense. So all in all, the message of this is you need to use the H4 time frame and the daily time frame for your overall analysis, right? But then now when it comes to opening trades, you need to use your H4s and H1s. But I personally, I would advise you to use anything less than 30 minutes, right? H4 and H1s is great for opening trades, right? But then now, the last thing that I'm going to talk to you about, right, is the volatility of a market. So all of this I'm saying, it also depends on the volatility of the market. Some markets are very volatile, right? So when you look at them in the H4 time frame, on the daily time frame, you can't clearly identify where the peaks and the bottoms are. You can't see the highs and the lows, right? So you might find that in those markets, you need to fine tune your strategy, because you can't just like apply everything to every kind of instrument that's out there. No, you need to adapt to what's there, right? So being a great trader, right? Being a great trader means that when you're going to those other instruments, you are looking for the like structure first, right? You're looking for the peaks, the bottoms, the highs and the lows. You're looking for the trend. So if you can't clearly see it in the daily time frame, go lower, right? And look for it in the H4. If you can't still find that structure, go lower and go to the H1. And if you still can't find the structure, go to the 30 minutes now until you can get like a proper structure. So I used to do that with the NES 100, right? Because with the higher time frames, sometimes it does have a good structure in the higher time frames or the daily. But when it doesn't, I know that if I go to the 30 minutes or the 15-minute chart, that's where I could get the most trades in a day in terms of NES 100. If I go to the 15-minute time frame, I would see the peaks and the bottoms so clear that it wouldn't make sense for me to go to those other time frames. So I'd just get in and out, in and out, in and out. And you know, with JP markets, how easy it was to make money like that. So that was the strategy. And in today's video, that was the overall message. Like, use the higher time frames when you're trading with currencies, because currencies aren't as volatile as indices or all those other things. So when it comes to currencies, use daily, use H4 to analyze. And when it comes to opening trades, you want to use the H4s and H1s. Even if you analyze it on the daily time frame, go to a lower time frame to open your trades always, right? So that's the overall message of the day. Like the video, subscribe, comment. I'm gonna see you guys on the next one. All right, peace out.